Hello, everyone. Hope you're all doing well. Welcome and thank you for taking out the time out of your really busy day to join this webinar brought to you by Payoneer. My name is Shalini and I'm the marketing manager for India at Payoneer. We're really excited to have Tally, a key player in providing ERP solutions for IT SMBs, and LegalWiz.in, that's an online legal solutions partner with us, as a speaker panel for today. So, our webinar, Expanding IT Services Business and Processes with Technology, has some really exciting agenda. Like the topic of the webinar suggests, in today's session, the speakers will cover tools and best practices to expand your services business overseas. Let me give a little brief on what we'll be covering in today's session. We'll be talking about exploring foreign entity incorporation, any challenges faced while venturing into global markets, also ensuring compliance while setting up a foreign entity. We'll also talk about best practices for handling cross-border IT services and first practices in outsourcing the accounting function. So I'm really excited to have Mr. Shrijay and Mr. Pugal as our speakers, with Mr. Shrijay as our first speaker for today. A little brief about his profile before I hand over the session to him. So Mr. Shrijay is an e-commerce and digital commerce veteran with over 12 years of experience and 3 ventures to his name. He currently runs LegalWiz.in, a legal tech company that helps startups and SMEs with business professional services and legal compliances. As of today, LegalWiz.in supports 7,000 plus clients across India and has some of the most prominent startups in Gujarat as clients. He's best known for his people skills, analytical approach, business acumen, and can-do attitude. Thank you so much for being here, Mr. Shrijay. Before I hand over the session to Mr. Shrijay, I request all the participants to share their queries in the Q&A section, which we'll be addressing at the end of the session. I'm so sorry I interrupted you there, Mr. Shrijay. Please, over to you.
Thank you so much for a very warm welcome, and glad to be part of the webinar with Payoneer and Telly. Thanks a lot for having me today, and I hope to add value. If there are any questions while we are presenting, definitely feel free to kind of put that in the chat box, and we can take the Q&A session right after the presentations. So with that, let me just share my screens real quick, and we can get started. Is my screen shared?
Yes, Mr. Shrijay.
Perfect. Yeah, so we are going to talk about expanding IT services. Obviously, as we all know, most of the IT companies, whether that is into ITES or even digital marketing services or other branding consultation services and other services business in general, there is a tremendous scope in acquiring clients from overseas. And there has been some specific questions about how do we structure that, how to kind of set up the entity, if at all we need to set up an overseas entity, or do we really need to set up an overseas entity to start with. And so these are some of the questions that we are going to answer today, along with then Pugalji kind of taking a deeper dive into how to set up best practices in accounting and how Tally can help in making it easier for the businesses. So when we think about the export of services, right, and people providing their services to overseas clients, from a definitional standpoint, GST kind of defines, and earlier it used to be service tax, and then now it is obviously GST beyond 2017. There are some key criteria on how you would define a service to be an export of services versus not. As we talk about export of services, it is interesting to know that all the export of services fall under zero-rated services as defined under the IGST Act. And when I say it is a zero-rated services, that means that GST is not applicable, or it is 0% GST is applicable, right? So the definitional criteria for qualifying of exporter of a service is obviously the supplier has to be in India and rendering the services outside India, which is very self-explanatory. At the same time, the payment of such services need to be happening in a foreign convertible currency. And obviously very recently, since the government also has in some cases, they also permit, specifically through Reserve Bank of India, if at all the uh, payment has been realized in Indian rupees. But generally speaking, most of us do realize the export of services payments in some sort of foreign convertible currency, whether that is in USD or any other foreign currency. And finally, the supplier of services and the recipient of the services are not merely an establishment of a distinct person. When we talk about that, it is not just an entity that is created to take advantage of export of services provisions, but something that genuinely qualifies as an export of service. um, right. So having said that, there are two major ways how the Indian establishments or the companies would export their services. Most of us would have overseas clients who are directly paying to the company in foreign convertible currency, and purely it being an export of services. At the same time, a lot of other companies, or a lot of larger companies, they do sort of explore an option of having a sales office or an establishment in the foreign land, and essentially that becomes either their sales engine, wherein most of their service rendering happens still from India. So in other words, they have developers or designers or marketeers or other workforce that is hired in India, obviously on Indian payroll, and they establish an entity in foreign land, for example, either a US, Delaware C corp, or a company in Singapore, or anything like that. So those are two primary ways how people manage international business. When we think about establishing an entity in the foreign land, obviously it can either be a foreign parent Indian subsidiary, or vice versa situation, or it can be an independent arm, in which the Indian entity essentially have some sort of relationship at the arm's length with the company that is, or the corporation that's been established overseas, right? So while we think about what approach, one or the other, is better for us, there are some key criteria that we would want to explore more, right? So what are the advantages, or why would anyone think of establishing their company or organization in the foreign land, right? So the most obvious advantages are if you are trying to create a local brand in the international market, right? It definitely makes a lot of sense to have something which is more tangible to your clients. It also helps you in terms of defining your contracts, because some of your clients might also shy away from contracting with a foreign incorporation. They might be more comfortable dealing with the rules and regulations and law of the homeland, and in that case, obviously they might want to prefer somebody who is already incorporated locally, right? Also, there are taxation advantages in some cases. So while you are choosing a country for incorporation, there are some countries which offer you really good tax advantages as opposed to the others, right? So countries like Dubai Free Trade Zone or Singapore, these countries have very good tax advantages. So these countries are known for offering tax advantages, tax havens. So the earnings that sort of your earning potential and your profit potentials really maximize. So if taxation is something that you would want to explore, and you would want to save taxes, then obviously that becomes one of the other considerations why you would want to have a foreign corporation. Obviously, if you want to hire local talent, if you have employee base that you would want to set up in international countries, and obviously that becomes another consideration. A lot of times it is perceived that if it is a purely an outsourcing job, it comes at an outsourcing rate, as opposed to if you have a local entity and a representation, then obviously you would be able to negotiate better rates with on-ground servicing and physical connectivity. So that's another consideration. If that is becoming the rate justification is becoming a challenge, then obviously that might be a solution to it, where you have more tangible sort of solution that is available in the local lands of your clients. Eventually, a lot of private equity, a lot of venture capitalists, they would want to invest in more mature markets. So if at all you are in process of raising funds, you would find that some of the Ps and venture capitalists would want to invest in entities which are rather established in countries where the law enforcement and establishment is a lot better, right? And so that might be one another reason why you would see companies like Flipkart and so on and so forth. They are incorporated in Singapore, as opposed to their major business really comes from India. So that might be another consideration why you would want foreign incorporation. And finally, while you are doing all of these, and there are definitely some obvious advantages of having an incorporation in India, you would also want to weigh this benefits against the compliance burdens or the maintenance hassles, or keeping up with a local law of an international territory in mind. So if your advantages are outweighing your resources that you are going to deploy on making sure that you stay legally compliant and secured in the foreign land, then obviously it makes sense for you to go ahead and establish an overseas entity to procure business or to service business as such. So now let's kind of focus on the option one, which is essentially purely an export of services, which is where your entity is based in India, and your entity is serving clients which are from overseas. In that case, obviously, the regular compliances, whether it is a private limited company or an LLP, your annual compliances and things like those, that will definitely apply. But over and above, some of the pointers that you would want to make sure that you comply with, or at least you have a consideration to, is first thing first, as I mentioned, your export of services as qualification, that falls under a zero rated service under IGST Act. And what does that mean is, usually where your business professional services or your IT consultation services fall under 18% of GST bracket, if you are exporting those services, you can take a benefit of invoicing at a 0% GST, and export of services remain zero rated or exempt in that sense. For that, you definitely have to have a GST registration, even though you have not crossed your GST qualification, trade volume or the turnover. You would still have to have GST registration to be able to qualify as a zero rated service. Along with that, something which is called a LUT, or a letter of undertaking, is essential. To have in place, if you are taking an advantage of that. While you receive the funds, whether you are receiving the funds through PayPal or Payoneer, or I really hope that it is Payoneer, one of the very premium and fantastic services that they provide to collect money from across the globe. If you are collecting payments, in such accounts, or if you are collecting payments, through a regular wire transfers in the bank, it is important that you obtain an FIRC copy and keep that for your records, to justify the payments that have been received, and you are being compliant with the RBI norms. Also, while you are accepting a payment, it is important to attach a particular purpose code to it, right? So there is a list of purpose codes, which differs from business activity to activity, whether that is money that is received to for the maintenance of the Indian subsidiary, or that is towards the payment of certain type of services, whether that is IT, ES services, or design services, or accounting outsourcing services, and so on and so forth. So every business activity in that case has a different purpose code, and so you are attaching a right purpose code for bringing the money in. The most important thing over here to make sure is to also have appropriate contracts and invoicing structure. And I'm sure, while Pugalji is going to talk more about the invoicing and e-invoicing, I'll touch briefly upon that, and more importantly in the contract, right? So there's several different clauses that you would want to make sure that they exist in your service level agreements or the service contracts. Primarily the jurisdiction that you select. So if at all the contract goes in dispute, then how do you fight it out or defend it, right? And while most of your clients would impose that your jurisdiction falls under the foreign land, obviously you would want to kind of rethink. And if you have a negotiation over it, I would ideally suggest to have it in the homeland. So if at all it goes into a dispute, you can challenge that in the local court. More importantly, because it is in the home court, obviously you have an inherited advantage of being local, and obviously minimizing your cost to take up the legal battle at that point of time. So that could be one of it. And apart from that, obviously your service level agreement should be detailed enough to outline your work order, your payment schedules, your if you are billing by hours, then how are you going to manage the hourly timesheets? Or if it is an FTE that is being sold, then what is the tracking system that you have in place? What is the reasonableness in that, and to what extent your client can interfere in that, and those sort of things. Also, it kind of attaches an SOW, or a statement of work, wherein what is the exact outcome that uh, you are supposed to provide, and what are the timelines to that. And if it is on a project basis, then what are the complications that could occur if the timelines are not being met, and how do you define that to be a blocker from an input from a client side, versus something where you fall under the breach of contract, wherein simply you are not able to meet those timelines or the standards of quality, and so on and so forth. So while a lot of people, as I have observed, if it is really a small scale ITS company, they usually tend to download copies of SLAs off of Google. I would very highly suggest and recommend having that vetted through a good lawyer, or drafted it through a good service, wherein your interests are secured. And if at all it goes into a dispute, and you have to take legal help, then at least that should be defendable. So if at all, while you are building your practice in an overseas market, one investment that you would really want to make is to really get a good SLA drafted for yourself, which makes sure that you are legally secured and covered. And that is probably one of the key takeaways from what I'm going to talk about today, because most of the small ITS companies, they kind of ignore that, and when it actually goes into a dispute, then they don't really have a defendable position as such. So I think that is a key takeaway from this slide. Then obviously we are going to talk more largely about, if while you are weighing all of your options, you really think that foreign entity is an option for you, right? Then you should ideally first do an exercise and choose for what benefits are you going to establish a foreign entity, right? And what foreign land is the most appropriate for you, right? So if you are considering taxation purposes, then obviously you are looking at Singapore, you're looking at Dubai Free Trade, RAK, Ras Al Khaimah, or other free trade zones, stuff like that. If you are trying to access Asian capital, private equity firms, then Singapore becomes a great option. If you are primarily serving US based clientele, or you want, rather straightforward compliances, Delaware is a great option in the US to incorporate a C corp. So depending on what benefit are you trying to get, uh, you would want to pick and choose the country that serves the best purpose, right? The second thing is then obviously you go into selecting what is the entity that makes most sense for you, right? So specifically taking an example of, let's say, US, and there could be two different options. Either you could do an LLC or you could do a C corp. An S corp is rather something that is not very wisely available option for foreign nationals to incorporate in the US at least. So C corp and LLC becomes your ideal options, out of which a lot of times people would rather go with a C corp, for the reason being it is more of a corporate structure wherein your taxation is managed at the corporate level and not passed through the individuals, which are the members of an LLC. And there are obviously other nuances, right? So while you are deciding on a particular structure, you would want to definitely consult somebody who is well versed of local laws and really can guide you through that process rather than going with what everybody is doing. So that is very important. If we talk about you know compliances in the US, and you have your federal filing, you have your state returns filing. There are registrations which would be required in terms of your TIN or tax identification number, your EIN, which is your employer identification number, lets you hire employees, and so on and so forth. So every country will have its own requirements of government registrations and filing requirements. So while you pick and choose the country as well as the business entity formation type, you should always know what are the compliance requirements and burdens that are coming along, and make sure that you comply with that. And for that, you have a right kind of consultation that is available, rather than not being compliant, because the penalties and the interest and other financial losses may be a lot higher. And at that point of time, being in a foreign land, it becomes a very hasslesome process to kind of go through all of that. Now, let's say if you have an entity in the US and then you have an entity in India, whether that is two independent entities or that is a foreign parent Indian subsidiary, sort of a structure, you would also want to establish a transfer pricing mechanism, right? So ideally, most of the organizations, what they do is they have their development or their manpower staffing in India, and then they have a sales office in the US or other Western country, which essentially is bringing in sales for you, but the service rendering happens from India, right? So it happens from India to the US entity, and finally the invoicing happens from the US entity in our example case. So in that case, it is very important to establish a transfer pricing, which is essentially defining that what is the rate at which your Indian entity is going to provide services to your US entity, right? And why this is very important is because if you don't make enough margin on an Indian entity, it is essentially qualifying as evasion of taxes, right? And that is not something that you would want to fall into the government's radar, and definitely not follow the best practices. So some of the best practices to establish a transfer pricing is either a comparable uncontrolled price, which is something where if you were to go in the open market and procure the pricing for that, what would that be? And at that point of time, it transfers at that pricing. A lot of companies, for the sake of ease, also go with a cost plus fixed percentage sort of method. So typically in the range of 15 to 25% is what usually people ballpark for an ITES company. But the transfer pricing essentially defines that it covers all the cost of running that operations in India, plus what is the reasonable margin that your kind of business usually makes in India, and that becomes your transfer pricing, to pass on your work from an Indian entity to a US entity. At whatever transfer pricing, the invoicing happens on a regular basis. Say it is happening on a monthly basis, and you're taking the remittance in. Um, you should also make sure that the invoicing is regular, justifiable, and it is following the best practices in the transfer pricing that you establish. The other important point that you would want to think of is, if your primary clientele is residing in the foreign land, you also would want to secure your intellectual property. So when we talk about intellectual properties, your brand is typically something which you trademark in India. Nonetheless, most of your clientele happens to be, let's say, in the US or UK or Australia or other countries. The possibility of infringing that brand or the trademark also is where your clientele is, or where your brand recognition is, right? So in that case, and all of these IPs typically are territory bound, right? So it makes a better sense to actually procure your IP rights, whether it is a trademark, then it is in the US, it is through a USPT, or you can also have a home application, and then you can extend that through WIPO, or World Intellectual Property Organization. So there is a Madrid protocol in place. So you could extend that to other countries. If it is a patent, then you can go through a PCT, which also is a way to extend your patent rights to other countries. And so you should definitely explore that, and make sure that the land that you actually have the largest exposure uh, of misuse possibilities of the brand, or the technology that you have patented, you get security in that particular land, because it is geographically bounded. And finally, as I said, whether it is an Indian company or it is a foreign company, uh, you always make sure that you are legally protected by the right type of contracts and agreements in place. Also, a lot of times, when your contract happens in the foreign entity's name, you also have a lot of sensitive information that is given to the employees of the Indian organization. So in that case, obviously, your employment contract or otherwise should talk about the data privacy, or confidentiality of data that you pass on for the critical information that you share with your employees, or the contractors and subcontractors. So it becomes very important to secure yourself with right set of contracts in whether it is a non-disclosure agreement, or whether that is a data privacy mechanism that you have in place. That becomes extremely important, so you don't have to take the burden, uh, of any breach in that contract. And if you have subcontracted that to any other Indian company, or if that is being exposed to your employees, but it is a critical information, you make sure that it stays secured, in that manner, through the right set of contracts being in place. So these are some of the points that I would want everyone to consider. First of all, obviously, does it make sense to incorporate in foreign land? If your advantages are outweighing your cost and compliance burdens, then obviously it does make sense. If it is solving a purpose, if you do so, then one, primarily figure out which country. Second, you figure out which establishment type. And third is, how do you structure an arrangement between your Indian entity and the foreign land entity, whether that is a parent subsidiary, or those are two different entities, but you still have a contractual relationship between the two. And you manage that or navigate that through the contracts. That becomes a key structure, obviously. And most of the countries will have very different criteria to that. And so it becomes very important to have somebody who knows about that particular country's rules and regulations and law, and understands that enough to guide you in a better fashion. So with that, I think I end my presentation for today. And uh, obviously, some of the other things that you kind of consider is, some of the countries like Singapore has a requirement of having a local, or Dubai also has a requirement of having a local representation. as one local director at least. Versus US is a more sort of open market wherein an international or a non-national person can also open a corporation very easily. You just need a registered agent service or an RA service, which is mandatory to keep track of your governance related compliances, related communication with the government, and so on and so forth. So every country has very different set of rules, and becomes very wise to have somebody who knows that very specifically and execute that through them. With that, I think I would hand it over to Pugalji, and definitely very happy to answer any questions if you guys have.
Thanks a lot, Shrijay, for going through the need to establish an entity overseas, managing steps in incorporating a foreign entity, and processes related to everything compliance. I hope it's been an insightful session for our audience as well. Next, I have Mr. Pugal, who would be covering aspects of technology and tools that can be leveraged by an IT SMB to expand their businesses globally. Let me give a little brief about him before I hand it over to Mr. Pugalji. He's had 38 years of wide ranging experience in fields of accounts, inventory, statutory, and training, and is also the founder of Potential Solutions. Mr. Pugal has been associated with Tally Solutions Private Limited for the past 15 years as an associate vice president and has shouldered various responsibilities in the organization with core deliverables on domain and product training and conducting sessions representing Tally since 2017. Once again, if you're interested in asking further questions, please feel free to drop in your questions in the Q&A section, and our panels will take it over at the end of the session. Over to you, Mr. Pugal.
Thank you. Thank you, Shalini. And thank you, Shrijay, for giving a wonderful insight into the nuances and the compliance part, especially regarding the, establishing an entity overseas. So I'll take up from Shrijay, and then I'm going to talk about what is the technology that you have for you to manage this operation, expand nationally and globally. So I have a small presentation. Let me just quickly share the presentation. Okay. Tally has been a technology partner especially for our Indian SMEs for the last 36 years. And we have been providing technology solution for business operations for our businesses in our country. So on the same line, as an organization, if you are planning to expand nationally or globally, very important thing that is required is that you need to have a technology which can very important thing is that you need to have an integrated technology which can take care of your operations, expansion, growth without being an hassle for you to concentrate on what kind of technology or what kind of tools that are required for you to grow is one very important thing that you need to consider, especially when you are on an expansion mode. Okay. So Tally as a technology, if you see, we have an integrated solution for the global reach also. Like for example, if you see, for you to go into a global area, then Tally as a technology has a module or a feature which can handle your export and import also. The next thing is that very important thing that once you are in the international commerce, you would be dealing in multi-currency, different currencies. And the second aspect is that the foreign exchange, forex gain or loss. So how do you manage them? So this whole thing of you are managing your international commerce along with handling the currencies and taking care of the forex gain or loss is handled by Tally. And very important thing is that, like Shrijay has mentioned, and all of you also are aware that once you are into export, then irrespective of your threshold limit, you are supposed to mandatorily register under GST. Now, GST compliance again, especially for your national commerce and international commerce, you will be registered under GST, and it is very very important. And off late, we have been seeing that the kind of the technological marvel that GSTN is bringing. Right, so very very less compared to 2017, 5 years back when GST was introduced. We know the kind of struggle that we had gone through, and today you really don't have to do anything. I mean, like, all your input gets auto populated, and every information gets auto populated in your system. So similarly, all your export related information, if you have an integrated technology which can take care of your accounting need nationally and internationally, in case of a trader, inventory management system, and very important for both the entities, the GST compliance part of it. So you have all this put together into the system, which you are not going to do multiple iterative data capture. It is going to be one single data capture that you are going to capture the data in Tally. Now, how do we handle multi-currency? Like, for example, we have this multi-currency feature in Tally, where you can have not just one foreign currency, you can have multiple currencies, and also you will have where you can specify standard rate based on your sales and the amount that you have received. Your selling rate and buying rate gets automatically populated in the system, and it is going to apply these rates accordingly. And that is how Tally is going to also keep track of the forex gain or loss. And not just one multi-currency, you can have multiple, whichever country you are dealing in, you can have multiple foreign currencies created. And the best part in Tally is you also have the option of cross currency transaction. So you can bill it in US dollar, let's say, to a customer in UAE. You are billing in US dollar, but then you are going to get the remittance through the AED from your customer. Well, even those kind of transactions is handled based on the exchange rate that gets auto populated on the transaction basis, or you can set it up using your standard cost. So that way, it basically takes care of your multi-currency requirement from your billing perspective. And from billing perspective, again, the GST has got certain criteria that has been specified, the kind of information that needs to be captured or printed on the invoice, like, and uh, Mr. Shrijay had mentioned about export is normally is going to be an zero rated transaction, but then you need to have an LUT or bond. And normally today, I mean, like, getting an LUT is very very simple in GST portal. You must have experienced. So in Tally, once you have an LUT, you can specify the detail, so that I mean, like, your taxation part is taken care, and the required information that needs to be captured. Like, if you see here, you are billing this in uh, dollars, and the information that needs to be captured is, you have to mention that you are supplying to an SEZ through LUT, or an export. So this is the caption that needs to be captured, which gets auto populated when you are generating your invoice for your export. And this is another invoice where you can do an invoicing in the UAE currency. AED billing can be done, and like I mentioned, you will get the cross currency transaction managed in Tally. Then comes your e-invoicing. I mean, in export, though, I mean, basically you don't have this e-invoicing especially, but then for your local or your national invoicing, Tally again has an integrated system where within the software, you can generate your e-invoice by click of a button. So as a Tally user, I'm sure many of you present here are Tally users. I mean, like, it is just simple. It just takes hardly 2 minutes for you to enable e-invoicing once you are falling under the e-invoicing thing. And all of us are aware that from 1st of October, the threshold limit is reduced to 10 crores. So every entity in any of the last 3 years, if their turnover is 10 crores and above, so they will be falling under e-invoice generation for B2B transactions. So the normal way that you do entry in Tally, you do the entry in Tally, and all you have to do is that Tally is going to ask you, do you want to generate e-invoice? You're going to just press yes, and there is one small registration you need to do, and you will capture the username and password in Tally at the beginning of the day. It is going to remain throughout the day, and then every time you don't have to keep logging in, and all you're going to do is just enter the username password in the software and do your normal billing and say you want to generate e-invoice. Tally is going to automatically export the data in the required file format. It is going to upload the data on the GST portal, and then it is going to fetch the 64-digit IRN, acknowledgement number, acknowledgement date, and the QR code. Now, this is the default Tally. The user need not have to do any additional, customization or anything. This is the normal Tally that you are using. Your e-invoice gets automatically generated through Tally from within the software. Then GST return again is a very important aspect. I mean, like uh, some of you, I mean, like must have heard through your, business colleagues that they would be getting a notice of the turnover that is declared in GSTR 3B is not matching with the GSTR 1 return, right? So, and basically the reason is, the primary reason is that as a user, the person is not using a single system for capturing their accounting information and GST compliance related information. That is where, basically you have this kind of a mismatch in some cases. But once you enable GST and start utilizing the GST feature in Tally, it is going to be integrated. So absolutely the data that is captured in your sales invoice or in your purchase invoice for your input tax credit, all information is going to be single data, which is going to be reflected in various form, including the annual return form. Okay, so that is one aspect of it. And all the user needs to do is just pass the transaction in the normal way that you are passing a sale entry or a purchase entry. And with a small configuration, Tally is going to identify what is the nature of transaction that particular data is getting captured. Based on that, Tally is going to capture that information, and it is going to populate in either GSTR 3B or in GSTR 1 under the respective tables. Like, for example, if you see here, the outward taxable supply, which is at 0 rated, is the export invoice that has been raised by the user, and it automatically gets captured in the GSTR 3B. And at the same time, it also captures under GSTR 1, which is going to be the same value. The next aspect is that one, yes, global reach. How does Tally as a technology is going to help you, so that you are seamlessly able to keep moving forward, or seamlessly able to, as you are growing, Tally is allowing you for an incremental implementation of your growth through the technology without any major hassles for you to manage your operations. So one is the global reach. The other important critical aspect is that how using Tally as a technology effectively you can manage your operations. Okay, so one of the most important thing post COVID, we are all aware that the most important thing for any business is working capital, which is basically determined by my cash flow. So how much are we on top of our cash flow management, especially during these period? It is very, very important and critical. So with the help of Tally, I mean, like with the help of these Tally features that are available, it is very easy, very simple for the entities to have a near accurate cash projections. Like, for example, with proper Tally also has a feature of bill-wise detail, which is going to manage the receivable and payable management. And if you are able to manage them with the proper, based on your credit policy, with your proper bill-wise detail, with your proper credit days and all those things, you are able to now actually incorporate all those receivables and payables based on the dates which these amounts are falling to. So that is the major aspect of your cash flow movement. The second aspect of it is that you will be having regular transactions, or monthly repeated transactions, which relates to your fixed cost, like your salaries or rent and other thing. If you're not bringing them into the cash flow projection, then the cash flow projection is not going to give you a proper thing. So there is an option in Tally where you can, all your recurring expenses or your income, you can capture them as provisional transactions, which means these transactions which are going to happen at a future point in time is not going to get impacting your books of account. But then those provisional transactions that you are going to capture will be incorporated into your cash flow projections, and it is going to give you the proper cash flow month on month, so that you are well prepared to meet any consequences which are throwing information about what is the situation going to be at a later point in time. And this whole thing can be managed by click of a button. This is just a simple thing, screen which basically going to project you the cash flow projections based on your receivables, payables, and also the provisional transactions that you have captured. So these are the provisional transactions, even though the data is here only till July. If you notice here, all the provisional transactions example taken is rent and salary. For the entire year it is considered, and this whole amount gets populated into the cash flow projections, and it gives you the proper cash flow. The second very important aspect, which I believe personally most of the businesses ignore, is the hidden cost. And there are various hidden costs. I'm talking about a very, very important hidden cost, which is the money that is being outstanding beyond your credit period. The amount of interest that you're losing is generally ignored by many of the businesses, right? And this is something which is not going to get reflected in our in profit and loss account or income statement, right? And which definitely is going to hit our bottom line, right? So again, Tally has a beautiful feature called interest calculation, where it is, this feature is like, it's like a game of what if this customer is not paying me beyond the period specified for credit days, and the number of days which is being overdue. What is the interest that I'm losing? You might not charge interest to your party, but then at least this information is going to give you an insight of what is the amount of the return on investment we are losing. And we are all aware that any credit that we extend to a customer is as good as giving them an interest free loan. So you would have a credit policy based on various criteria that you apply, and it is very important for you to make sure that you are able to collect them within your credit period, so that these hidden cost is not going to really you know pull your bottom line down. Okay, so you have this tracking of loss of return on investment, and the feature that is there is interest collection. It is very, very simple. All you need to do is you go to each party and then say what is the interest that you want to levy, like 9%, 10% per annum you want to levy, and that's all you're going to do. Rest everything Tally is going to take care. So the moment you just do that, you go to a report, Tally is going to give you a report, and these are the outstanding amount which are overdue. And based on your credit period, for example, you have given a credit period of 30 days, you make an invoice on 1st of the month, so 30 days credit you are doing. So let's say April 1st you make an invoice, 30 days credit, the amount is due on 1st of May. And from 1st of May, this company, if you see the data, current date is 20th of July. So from 1st of May till 20th of July, on the overdue amount, based on the rate of interest that you have specified, Tally is going to calculate, and then it is going to give you the amount of interest that you are losing. And if you see, there is one arrow there, the third line item, if you notice here, even though there is no outstanding, it is still showing you that there is an amount of interest that you are losing. So what Tally does, any amount that is cleared, which might not be due as on today, but then the amount gets cleared beyond the credit period. So even though those amounts, Tally calculates the interest, and you are going to get this value of interest that is there. So this will definitely give you an idea of how you can manage your client base or customers, and then what is the kind of credit policy that you want to do. It gives you more clarity on managing your outstanding amounts. And then the last one is, again, you have a very, very important report, which is the real time health checkup, right? So at any given point in time, you can go to this particular report. This report in Tally is called as ratio analysis, and this report is going to basically give you certain principal group information and also the principal ratios, like, what is your working capital. And it also gives you, this is one report which is going to give you information which form part of balance sheet and also forms part of profit and loss account. So you have all this information, the certain information that you're going to get. If you notice here, the value is different. It says sundry debtors is 19.15 lakh, but whereas due till today is 11.23. So the total sundry debtors is 19.15, but as on today, based on your credit policy, you are supposed to receive 11.23. So like this, lot of information, insights you get. Now, what is your working capital turnover? How effectively you are using your working capital? So the formula is given here, so you would know that how well you are able to utilize your working capital. Now, the figure here is not really encouraging or not really rosy, because it is the company here is able to do their working capital turnover just 0.36%. So ideally, it should be 1 or 1 plus. So like this, you have on by click of a button, you will know exactly what is your gross profit, what is your net profit, what is your operating cost. You will also see turnover receivable. How much time does it take for you overall for you to collect the money from your customers which are outstanding, and various other ratios are there, which is going to be very helpful to you when, especially when you are going for any funds with the external agencies. So broadly, if you see, Tally as a technology has a complete solution for the business operations, which can take care of their financial requirement, inventory requirement, and very important is the compliance aspect of it, which all three of them gets integrated with one single interface and capturing of data through a single interface. So that's these are few things from my end. Again, if there's any questions, we will take it up. Over to you, Shalini. Thank you very much.
Thank you so much, Pugalji. Thank you, Pugalji, for going through the importance and various modules covering different aspects of operations to expand nationally and globally, and handling commerce with multiple currency, handling GST returns, and even tracking an important aspect of hidden costs. Thank you so much, Pugalji, for that. Let's go over the questions that we've received. So the first one is a question asking, I think, pertains to Shrijay. Do we have any indemnity insurance in India? So the attendee here provides IT services to UK and US companies, and one of their customers was asking about the indemnity insurance and wants to understand what kind of options we have in India in case there is an issue made by one of their teammates, the attendee's teammates. Would that be covered by the insurance provider? You're on mute.
So professional indemnity or you know indemnity insurances are very common, and a lot of trades that happen in an international market, a lot of your US or other Western countries clients would require such insurances in place. In India also, there are insurance companies that would provide you professional liability insurances. It essentially, what it does is, it covers you from any liability that occurs for the reason of negligence from your employees, or if it is if it is a genuine mistake that has happened and it is not deliberate. It would cover you for the potential financial losses that your end client has to bear because of the negligence, on your professional part, which also covers your team. If you would want to procure an insurance, I know there are a lot of insurance companies that provide a professional liability insurance in India. Uh, I would ideally simply suggest, go on an aggregator website like Policy Bazaar, and search for the professional liability insurance, or indemnity insurance for professionals, and there are plenty of options that are available at a minimal premium, which would cover you, with the requirement. Sometimes also client has this as a prerequisite, and sometimes it is also just good to have, because a lot of IT companies deal with a lot of a lot of sensitive or information that can be categorized as confidential. So that's definitely there. Apart from the insurance, you would also, as I told earlier, you would want to make sure that it becomes a confidentiality, becomes a standard clause in your contracts, whether you are subcontracting that work or you are drafting employment contracts. Obviously, make sure that the liabilities that you inherit in your service level agreements also is further passed on to the contracts that you further do to get subcontractors or employees who would work on that. So that is always a better way to manage that. I hope that answers.
Okay. Um, Another question from the same attendee actually. As an IT service provider, again operating from India and servicing the customers from
Mhm.
UK and US market, if any of the team member from their team made any data security breach unknowingly, how does the customer handle the issue legally?
So the customer obviously can, if it is a negligence from your team side, then the customer obviously can sue you for breach of contract in terms of data security, and they can claim the damages, whether those damages are in literal sense, or it has damaged their brand, or it has damaged in terms of leaking of secured information, which has a potential financial loss in terms of their market share drop, or the financial losses in terms of prospected sales that they have out of that product, and it being compromised because the confidential information, whether that is a trade secret or that is any sort of technological aspects that they would want to keep it secret, and that has gone out. So definitely there can be a legal consequence of that, and for that, I think it is in connection with the previous question, where a professional liability insurance is definitely a wiser way to manage that. At the same time, having a right contracts in place is important.
Thank you, Shrijay. Just one last
Mhm.
question. If
Sure.
the service provider's registered office is only in India, but it's trading with US customers and the MSA is agreed with the California jurisdiction, will that case affect Indian entity legally?
It will. So a jurisdiction is something where essentially you define that if at all there is a dispute that occurs, then what is the legal jurisdiction, or what are the courts that we are going to go to defend that case, right? So in case you have defined Californian courts as the jurisdiction, then obviously it becomes more advantageous to your client than you, because you have to fight it out in a foreign land. And that is why a lot of times when you are drafting a service agreement, if you have an opportunity of, or if you have a weighing, then you should always have the jurisdiction set as the local Indian jurisdiction, so it becomes easier for you to defend that. Nonetheless, not a lot of clients really agree to that. So it becomes a point of negotiation, and how much weighing that you have versus how much desperate you are to kind of get that contract.
Thank you, Shrijay. Thank you so much for answering the questions. And thank you to our speaker panel and all our attendees for taking out the time to attend this webinar today. I hope it's been insightful to all our attendees in some way or form. Before we end the session, I would urge all our attendees to please share their feedback at the end of the session. And if there's anything you'd like us to talk about in our next webinar series, please, we'd be happy to take in the suggestion. And if there's any feedback, how we can improve, please drop in your feedback there as well. So once we end the webinar, you'll see a feedback form. And just in case you're wondering, we'll also share the recording of this webinar either by tomorrow or the early next week. So those of you who have joined late and have want to understand a little more, please feel free to access the recording. Thank you so much, Shrijay and Pugalji, and thank you to all our attendees for joining in. I hope these insights do help you. Thanks a lot.
Thank you so much
Thank
for
you.
helping
Thank
us,
you very much.
having us.
Thank you.
Thank
Thank
Thank you,
you.
you.
Shrijay.
Great.
Thank you.
Bye.
Thank you, Shalini. Bye. Thanks all attendees. Thank you very much.